Hello guys, welcome to a Trading Parrot, and we saw another rejection from 116K as we approach the FOMC meeting, and that rejection has not fully filled the CME gap. People are asking me whether I'm already interested in taking a long. We'll cover all of that in this video, including all your questions. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. 1,000 likes is what I'm looking for, and only you can make me get as close as possible to that target. Tomorrow, I'm hosting a Trading Setups Advanced workshop for my elite members. If you want to join this, there is a link to join as an elite member to my Patreon community. We did a poll of what they wanted to see, and that was the option that they chose for tomorrow. Tomorrow is Thursday, and at midday, we're going to be doing this live session for 1 hour. And I have a FOMC sale. Yes, guys, they're cutting the rates, so why don't we cut 40% all Pine scripts and all Telegram channels in the shop in my Patreon? There you go. Enjoy. Let's have a look at the news for today, and we got a 7 and 8 and another 7 out of 10 in terms of bullishness. The first one is Bitcoin holds 113K. Ahead of the FOMC decision, 14.4 billion options expiry could trigger volatility. There is between a 98 to 99% that we get a 25 basis points rate cut. I feel like it's already priced in. What it cannot be priced in is whatever the Fed is gonna say in the meeting after announcing the rates. Of course, if we don't get the rate cut for some odd reason, that could be a cold shower for all the markets. But with a 99% probability, of course, that is very low likely to happen. Today's options expiry futures 72,000 Bitcoin call contracts and 55 put contracts worth 14.4 billion notional value. We have 82.5% position out of the money already, signaling heavy speculation for a sharp price moves. A dovish Fed could unlock 15 billion in liquidations and push Bitcoin towards the 118-120K, while a hawkish surprise risks testing 107 support. The conference is at 2:30 p.m. ET, and definitely is going to be a big catalyst. I'm unsure if this is actually covering the same options that we were talking about yesterday, the ones that were over 31 billion expiring on the 31st of October. Let me know in the comments if there are two sets of options expiring, one on Thursday, one on Friday. The news number 2, I don't consider this bullish as an 8. I think this is an overstatement from Perplexity. It says that 200 million in October 28, BlackRock's IBIT commands 55% of all the BTC ETF assets, because 200 million is really not that much for a single day. As you can see in here, we have 20, 90, 149, and 202. So this can be reverted very quickly, as we saw in the previous week with 500, 400, and 100. Just in 3 days, you can wipe this completely into the negative. So I wouldn't say it's the most bullish news. I guess Perplexity couldn't find anything else. And the 7 out of 10 is Bitcoin reclaims critical short-term holder realized price. Again, this 113K is multiple things at the time, but from the back of my head is 2, which are the most important. It is the point of control of the current trading range. Around that area, we have that peak. Let's look into the chart. You can see around the 111.5, we have the point of control. The 113 is the VWAP from the all-time high, anchor there, and it's also precisely the short-term holder realized price. At that price, most of the short-term holders have a very, very difficult question to answer, which is, being at break even, do we want to close the position and just call it? Do we trust this pump to continue going higher? And since we got that rejection at 116, just thinking psychologically speaking, how many people are at the moment just tired? I'm not talking about scared, because for a trader, for the typical average trader, there's something that is worse than being scared, which is being bored to death that nothing happens. That really drills the brain of the vast majority of traders. So do not underestimate being right there at the break even. Also, the options paying the least, that's the actual max pain for the options as well. So too many things are there causing stress to people in average at the very least. So yet there can be from that level 113 a sharp move into 120, liquidating tons of shorts that are piling up. Later in the video we will look exactly where they are located and where they can get hit next if this leg holds even before closing the CME gap. And I'm not saying that's going to happen. I'm just saying be prepared for that. Today is the FOMC meeting. Dan is saying that the Fed is expecting to cut rates by another 25 basis points. This is in itself should not impact the markets. That is not the big catalyst. Having something close to a 98% and in a sustained way for the past week and even more means that the market has had enough time to price in that. What matters is what Powell says afterwards. Another rate cut is priced in for 95% in December as we speak. So whatever he says that goes against that in a strong way could be the catalyst to get a fourth time that we have a FOMC meeting and we have a correction from there. We covered that in the past 2 days. And again, not a forecast, but after 3 times in a row getting that with Powell saying we still have inflation and all of that. Bitcoin short-term TA update from Stock Money Lizards is saying that the purple resistance line coincides with the 61.8 Fibonacci retracement. Altogether, this is expected. Both scenarios are intact. 111.2 should act as support. If broken, we likely swipe the lows. So this is the current rejection that we just had. He's assuming that we should find in the point of control of 111, give or take, that support needed to go up. That should, in theory, get $100 away from fully filling the CME gap. So there is a chance that that is the case. The second is to put that low, and this resembles pretty much what I say yesterday in my video. Of course, I can tell that he's got a bullish bias. If general markets were to puke, of course, we should expect deeper than this. This is 2 scenarios that are very positive, that are very easy to handle. If you wanted to trade something like this, you can put an order at the point of control, somewhere around there where you fill the gap. Put a small amount and then put another amount at around 100K between there and 97. Let's look at where is the liquidity. So if you have a bullish bias, this is easy to handle. Now the problem is what happens if the market pukes and it drags Bitcoin and crypto with it. You have to watch my general markets video coming up later to understand what are the underlying risks currently affecting the macro. Martin is saying long-term holders have shed 325,000 BTC over the last 30 days, the sharpest monthly drawdown since July. Long-term holders are here in blue, short-term holders are typically buying in the opposite timing, so they distribute to each other, right? So they are just throwing the ball to each other, and as you can see, at the peak of 73, long-term holders were distributing. That's where I sold the first time Bitcoin massively. I ended up with no Bitcoin here, and I ended up buying in the opposite area where the long-term holders were also accumulating at these lows, double bottom, to get the next rally up. Again, here there is a decent distribution. And the one that we are having now is 325, so still hasn't reached those levels of 700K. But there's something very critical that you need to understand, which is the later we are in the stages of a topping market, you're going to see the long-term holders distribute less. Why is that? Because in the earlier stages, they will have already distributed a lot. This is an act of DCAing out of the market, and each stage of distribution becomes less prominent. Do not have the opposite expectation, because that's gonna kill you. If you are right now expecting them to distribute 1 million Bitcoin in here, man, that's not gonna happen. You're gonna end up waiting, holding your Bitcoin forever. Well, if that's what you wanna do, that is your decision. My intention is to have everything already distributed by end of the bull market. Despite the fact that that bull market might extend forever, I don't care. I'm not here to invest in Bitcoin. I'm here to trade it. And I have very little left anyways. Binance funding rates turned positive. Is a new rally beginning? Well, this is just tracking up until May. We can see that there has been a flip from red into green in the past, and that led into a new all-time high. So there is a chance that this signal by itself could play out soon. Of course, it's just an isolated one single signal, which we need to contrast with other ones. From digital gold to anti-gold, there is in here a little bit of a catch-up between gold and Bitcoin flows. You can see that very recently in October peak, everything was into gold and Bitcoin was down. Now they're catching up. There are some periods where this oscillator shows that there is a transition into Bitcoin, but at the moment they're just shaking hands right there in the middle. Are we gonna see a deeper correction in gold and Bitcoin taking back up? Well, we need to look into the general markets video separate that I'm gonna put out later. TD sequential from Ali Charts is saying that it has called every time that we get a swing on Bitcoin, and that we are currently seeing another signal 9 right there, calling for a potential local top. And we are, guys, officially in the longest Bitcoin cycle ever. Assuming that we haven't already peaked, of course, because in order to be the longest one, really Bitcoin needs to put an all-time high to prove that it's still out there pushing higher. Otherwise, that 126 was the all-time high, and it will match actually with the length of the previous cycle and the previous one as well, counting in days, which is really creepy. Let's have a look at the questions from my community. Good morning. At what price are you looking for a long? And I think, guys, that is not the right question. I do not put limit orders for days to come, and I'm blindly expecting to fill it. That is not my trading style. I appreciate that a lot of people do that, and they share that limit entry with their community. They go to sleep, they forget about it, they go for holidays, they fill the order, and then they decide if they like what they have. Personally, I decide a price, a range, and then I contrast that with what I'm seeing in the charts. And if I'm still liking that entry, then I take a decision in place. So I can tell you that I am interested to enter in a long if we fill the gap. I feel like I can average that down at 103K or lower, but none of those levels are going to remain in the exchange at this point in time, particularly prior to a FOMC meeting where we are expecting some volatility coming in. Eric says, likelihood that we leave the CME gap behind us. I think we could leave the CME gap behind us if the speech post the rate cuts looks very promising for the market. Like, for example, that they say that we must cut rates in the next meeting, or if we are going to need to do a double cut. People trade that, despite the fact that, you know my opinion, I do not think getting a double cut next or on this meeting is a good thing. That's pretty much like saying, yes, the economy fully broke and we are heading into recession. We must act extremely in panic mode to hold things from crumbling to pieces. That kind of reading with that lack of control is what also markets can fear a lot. 3 out of 3 times in the past when we went into the FOMC meeting, we have a pullback. So we cannot really discard the fact that it could be a sell the news events. So market rallies into 116, or even as we approach now the meeting, and prior to the readings of the actual cut, we get a rally. That will be the perfect preamble for a potential pullback right after if we follow the same performance as before. Where are the largest chunks of liquidity currently sitting? We're going to look in the short terms as well, because there is one right above 117 that got very heavy, putting the shorts slightly at higher risk. We need to cover that later. Why isn't volatility acting more volatile? It feels like we have such indecisions to go up or down. And normally I feel like volatility doesn't drag its feet this way. Well, we are in the history of Bitcoin on the monthly time frame with the lowest Bollinger Band width ever, period. This is the month and the period of Bitcoin, we could say the past 6 months, with least volatility in all the history of Bitcoin. We know that volatility is in a downtrend since inception, but we are currently in a swing low and the worst extreme low ever, which is calling for expansion, a squeeze, and that can be in any direction. In the past few days, we were seeing some manipulation, and I associate that with the fact that we have the expiring options that want to keep the price at 114K. Now we are at 113. And all of this is putting a lot of stress on traders. So I think they're doing a great job in that manipulation. I'm leaning towards the fact that yes, there is currently that manipulation. Could looking at the 8-hour maybe clear out the 4-hour mess? Yes, but I value a lot more knowing my enemy for years rather than changing to a new time frame suddenly. In Spanish, people say something like, it's better to deal with a devil that you already know rather than a white sheep that you are about to get to know. And I don't even know if it's really like that. It was something around those terms. Write it down in Spanish and in English so people can read it in the comments if you remember what I mean. But this devil, which is the 4-hour that has misbehaved now, by misbehaving by itself, it's telling me something, right? We know about the whipsaw effect, that we are shaking people in both ways. So I do not take that as invalid or low value information. That is information that I want to see. So by moving into the 8 hours, I'm just adding another time frame that I'm not used to, which I consider also a disadvantage. But to answer your question, yes, for 8 hours is gonna clear up somehow the mess, but for that I have the daily, so I don't feel like I need the 8 hours right now. I'm interested in your view of whether continuation to 150K is possible. Likely. I think 150K, yes, it is possible, and things can go really crazy. There is a very low likelihood that that happens, but we cannot really rule it out. Not because past performance says that we continue to check every single box. We can state it's impossible and we are going to rule it out and we are going to put right there our risk and get wrecked next, because that is not the way I trade. That's why I have that short with the average at around 122.5 with a stop loss in profit in case market decided that this year, this cycle is going to do something completely different. If that happens, I do not get wrecked. I do get paid still. Now, of course, I still struggle to decide where to enter in my long, which again is not something bad. It is what keeps me here with a 100% win rate. So I'm not gonna criticize that aspect or say that I'm doing anything wrong, because I am proud about that indeed. Check your crystal ball, please, and help us identify of closing the monthly with an indecision doji. Let's see, it's not doji, it's doji. So this doji candle in here is showing indecision. The most recent one we have was this one in here. We also have one at the peak in here. We have somehow this one, somehow that one at that 23K. And you can tell that although they are indecision, there is not a clear path. We cannot say something like if we have an indecision candle on the monthly, that is the top when we get it at the highs, or when we get it at the lows, that must break down or break up, because we have examples of both things all over the place in the bull market. I have the feeling that there is a chance that even though we end the month on Friday, that this candle is going to change right after the FOMC meeting and the options expiring. And by early November, when we look back at this, we are not going to see a doji candle. I cannot assume just by that candle that this is definitely the beginning of a bear market, or if we're going to have choppy sideways. I have a bias, and my personal bias, is that general markets are looking for a top, for a blow-off top. And when general markets find that top, Bitcoin is going to collapse with it. At the moment, Bitcoin is not pumping with the general markets, potentially because it's waiting for that event. Yes, there will be tons of people saying, with all the bullish catalysts, with rate cuts around the corner, with the trade war ending, and all of these amazing things, those are things that extend a rally higher, not end one. But we need to wait to see what Trump agrees with Xi, because he keeps saying that everything is ready for the picture and we all win, and then he says it doesn't really work, Xi is a terrible leader or whatever, and we're going to increase now to 500% the tariffs, and then everything crumbles again. Or what if today they don't cut the rates? I mean, something must give, in my opinion, in terms of that excessive bullishness. Let's look at the aggregated open interest. We continue to stay here in the area of the right shoulder. Open interest needs to pump beyond 38 billion and ideally put a new all-time high, or get close to put a new all-time high, to allow the price to explore the upside, to explore 130 and beyond. So far, open interest is very humble there, held by the 35 billion mark at the moment. October today, prior to FOMC, is in the negative 0.68%. The CME gap, in my opinion, using my tools, it appears as not filled. I've seen some people on Twitter sharing this chart and showing it with a wick to the upside that covers the remaining part in here. I am not sure what they're doing, or whether they're looking at that maybe on a different time frame. Of course, they're looking at it on the 4-hour time frame. So in the 4-hour time frames, possibly, no, not even in the 4-hour. I don't know what they're doing, but somehow some people are claiming that the CME gap was fully filled. On my end, this is Bitcoin CME futures on the 1 hour, 4 hours, 8 hours, and daily still has a gap, and the gap is between 112 and 110.8. So there is half of the gap still open. That is still attractive to fill that. And last week we took from Monday up until Wednesday at midday to fill it, and then we did another test of that same area. We are on Wednesday, and that midday is approaching, but the FOMC is also approaching. So I think the FOMC outcome is going to definitely have something to say whether we fill it now or later. And my crypto intelligence dashboard is highlighting the topics with the most videos that we currently have. And there are 5 videos covering at the moment the Bitcoin correction, with people talking about 102 to 113K. This comes from multiple channels: Crypto Crown, More Crypto Online, talking about historical setups and market context. Very interesting. People analyzing the 200 resistance on Solana, Ethereum talking from 5 to 7K breakout targets, the dominance rising pressure on all coins, the Nasdaq and the stocks rally, silver crash, the US debt, Sui, Chainlink, Dogecoin. I think the top topics for today, with the most views, the most engagement from people, which says a lot, is to do with Solana and Ethereum. People wanting really to get paid are watching those videos. And then we got the US debt with the 38 trillion, somehow with 2 videos is catching a lot of views relative to the rest of the videos. And the Bitcoin dominance rising, producing fear across traders. I have updated the Bitcoin status, and we had a breakdown on the 4-hour. That is the thing that we need to look into today. My community already has this up to date. We can see in here the breakdown on the 4-hour. Now we have our resistance at around 62. That resistance is 115K. So Bitcoin on the 4-hour needs to rally all the way into 115K put a 4-hour close above that level, ideally with the body above the neckline in here, so we can continue with the RSI target of the global top 85 RSI, which corresponds with 126.5K as of today. That is pretty much an all-time high if we can manage to get there. There's also the technical target of the price formation that you have in here of the 130. We just did a rejection. We extended the bull flag lower. We have a double top in there, and the A, B, C, D pattern has already played out. I did a mistake yesterday because I'm not an expert in harmonic patterns. This is some just spice that I'm putting on our videos, but it's not my main area of expertise. But you can see in here that this has already reached the B point. This is A, B. And the most conservative target is to reach B. Some people trade with the CD wave, the Fibonacci retracement, and they target 32, 05, and 618. So this aggressive target is pointing towards 110.4. What do we have there? We do have the CME gap that we can fully close if we achieve the golden pocket right there. Golden pocket is considered a bullish area for this retracement, so the bull flag can even extend there and still be considered a bullish retracement from which we can still come back here and push higher. Think about all this area in there that reached 109.6 and then came back there. Well, we could do a similar thing in here, do that and still be bullish. So I am thinking about this order block, this area in there, potentially to put a long personally. I'll have to look later in the video and see if we have some decent liquidity around there. Remember that I'm gonna summarize this and send it to my Patreon community later. If you wanna join, you can watch a very short video with the final outcome, because I'm still doing the analysis. On the daily, you can see that this is coming back and getting close to our support. We were very close to 111.7, which coincides with the 47 support, but still we don't put a close right next to it. Still we don't break the neckline. So on the daily, things are kind of holding in a healthy way. All we are doing is taking this fair value gap. We are done with it. Ideally, we don't want to go to the fair value gap of 109.5. That is a little bit too deep because it goes beyond the previous neckline that has still a target in play of 118. Going there, breaks a little bit the full formation, takes the neckline again, and also breaks down the most bullish support of 47.48. Put it on the table, potentially getting into global support of daily. That is our 35 RSI, currently trading at 103.6. Right, let's go to CPR. CPR is showing that the price is at the moment completely chilling just at this level, using it as support, not yet losing it. So it is in a place where if we hold the pivots, we can push and spring into 119, which is the first resistance, or if we lose it, we can go into 108 and 103. And remember that I think that we could pierce that because we have already taken all this liquidity. So there is really not that much point for market maker just to come into this area without really taking the big liquidity that should be staying somewhere at the lower lows. The weekly is still battling in here to reclaim, to confirm a fake out to the downside, a bear trap, that scenario versus getting the full rejection from this retest and then putting a new low and potentially, possibly even fulfilling the technical target, which is between 92 to 88. If we can reclaim the 115.7K price of Bitcoin on a weekly basis, closing basis with a candle up in here in green this Sunday, we have a good chance that we go into the resistance of 67, which is priced at 137K today. And we have a little bit more of profit taking going on at the moment, 103. You can see there that high. And if we focus on the previous profit taking in the recent price action, we got this one that happened halfway up, then this one at the peak. Those two together cause this crash, right? That profit taking caused that. Then we got another profit taking going on at this peak on the dead cat bounce that pushed back the price into 103 again. That happened at 104. Now we have some profit taking. We're getting into 103, and that has managed to cause just that. Will it cause a lower low? I don't know, but it's getting, in the gray area where, watch out, there is some profit taking going on. Not the biggest, it's not 117, but, it's growing. Ethereum has been on profit taking quite sustained in this area from late October. Leverage squeeze continues to have sell signals, low quality around this range. We are at 51 neutral. Again, we continue to stay flat in this area. You can see point of control, short-term holder realized price, VWAP anchored to the all-time high, and fear and greed index sitting right at 50-51 for 3 days in a row. What do you think that means? It means that everybody is staying in their comfort zone, or not comfort zone, but not too bullish, not too bearish. Let's see what happens with the FOMC. That's kind of my takeaway from this, apart from the fact that conveniently staying there also puts the most pain for option traders. All right, le creme of the creme. Here we have all the liquidity on the lower end, and here we have all the liquidity on the upper end, okay? But what I want to focus is on what we have very close to the price. Why? Because on a FOMC day, we should have some swings up and down, some fake outs and things. And what better to use on a day like that than noticing where the liquidity is. And at the moment, those shorts are taking it very seriously. You can see that from the recent highs of 116.5, they twice in a row added to the shorts, putting the risk up until 118.4. Unfortunately, that makes the case of the bull flag push into those levels a little bit easier. Let's do a trend extension from this leg into there. And let's see, an extension of 1 takes out 117. And a golden pocket takes everything up until 120. So we have somehow some liquidity that makes that easier. Remember when I used to talk about putting oil in the pan, so when you fry the eggs, they don't get all stick and you cause a massive mess? Well, consider this area of the pan well oiled. Now you can crack the eggs and start cooking. An extension of 1 can get you into 118 or 120 if we do a more intensive move up. What's going on with the longs? They are in fear of potentially entering around here and placing their risk there. The longs have their risk way lower, but let's put that out of the way and let's see, where do we have decent liquidity of longs? 104, 106, but not by a lot because they haven't really entered with big longs in here. This is an alpha that is actually making this not that bad of an entry, the area of taking the CME gap. If price gives us that gift of entering in this area, assuming that the FOMC meeting doesn't end up with, no, we're not going to cut the rates, because then I don't want to be in a long here. But if everything goes as planned and we still maintain the 95% chances of the next FOMC, the one after this one, for another 25 basis points cut, then it's going to make it very easy for these shorts to get wiped. A disappointment puts on the table 95, and a disaster meeting puts even 85. Let's say they add rates. Of course, it's extremely low likely, but of course, if that plays out, it's bad. Let's look at the 3-month. You can see that those shorts are also appearing in here at 117. The 90 is very heavy, is way bigger, and it's the perfect recipe for a dead cat bounce into here. But if things go positively as expected, these guys are going to get taken out very easily. We also see them on the 30-day. Those are placed around 116.5. Then we got the 123 and beyond. Below the price, that 107 is the big risk for taking along. Today, for some reason, Market Monkey Terminal doesn't work, so I won't be able to do that analysis. So let's focus on the other things we have. Fire charts is showing that selling wall at 117. That is 43 million. Then we have 39 million at 119K, 37, 39 at 125, and lastly, 57 million at 130. Purple whales, they were pushing up until 116. They haven't closed their position because this is flat, but neither they're moving down. So this profit taking was possibly at 116 responsible for small positions. Small positions probably close around this area, but purples are just holding that level. Just so you know what's going on, this is bullish looking. Yes, it's not a forecast. And we still have that massive open interest sitting at 111. That could be maybe the area where I need to see what happens there to potentially enter along. Shorts are now at bigger risk, but it's really flat. It looks in the red because it's minus 5K, but minus 5K means that we are just neutral. We have liquidity on both ends in the close proximity, in the recent price action. So from the point of view of delta, they are both exposed. Let's look at the order book. We have some red in here, but really neutral looking. 2 to 5 and 5 to 10 have minus 0.8 on the bid-ask ratio. So that is resistance at the moment. And longs are piling in here. When they get into 70, I start getting a little bit bullish as long as price has been coming down. That is a great alpha that we've been using in the past days. Price has been coming down, but we are now at 62. So we will need potentially 8 more and price coming slightly lower to be a high quality alpha that we can reuse, that we can reuse in confluence with other things. Fair value gaps, nothing changes. We are just going sideways in here. We have a small fair value gap up until 114, but we really need to break beyond the neckline of this pattern, forming what now looks like an inverse head and shoulder like this one. Oh God, if we do that, the target of that is huge. We already know it is around 130. The pattern is mutating, but the target is the same. This is still 130. Of course, if we start doing something like this, it starts looking a little bit odd. If we start doing something like this, then it's fully invalidated. Guys, if you want to trade Bitcoin before the FOMC, I will suggest that you do it post FOMC, particularly if you're a beginner, because the amount of manipulation that is currently going on is huge. But if you feel ready for the challenge, there is the exchange 2bit that was created by the same people from Bybit, and you can register in just 2 minutes. That's thanks to not requiring KYC to sign up. And as soon as you sign up, you're going to see that you get deposit $50 if you use the link in the description. After that, you can decide to deposit your own cash. And the more you deposit, the more you trade, you can get up to 30,000 USDT as a trading bonus. Thanks so much for watching this video. Hit the like, subscribe, write down a comment down below. That really helps the channel. And I'll see you just in a few seconds if you are part of my Patreon community with the short 3 minutes summary of this video. See you then. Bye-bye.